How difficult is it going to be for a lot of these developing nations?
I mean, so we've seen a big deterioration this year. There's been 4 headwinds affecting these economies. So first, the weakening in external demand. So global growth has slowed from, by more than 1.5% from above 5 to below 4. The second is that we've seen a big tightening in financial conditions driven by a reappraisal of US rate prospects. The third is oil prices. So oil prices have risen 30% this year. This is fantastic, of course, for oil exporters, but for EM in aggregate, so we estimate it's quite negative for growth for the oil importers in particular. And fourth, the tariffs and the risk of a trade war. So the combination of these 4 factors on our estimates are in the process of slowing EM growth by a little over 1.5 percentage points in total.
So, Kevin, what happens to dollar? If dollar goes up, this hurts emerging markets.
Yeah. So, and a lot of you're absolutely right. And a lot of the I think the pain that emerging markets have faced this year has been related to the dollar and the reappraisal of US rate prospects, in particular that tightening financial conditions that we've seen. I mean, really, the crucial question going forward, though, is to what extent is this bad news behind us for EMs, and there I think there is some more room for optimism. As we've already seen quite a marked slowdown in EM growth already. I think EM asset markets as a whole have discounted a lot of the bad news. So going forward, for the asset class as a whole, we think the risks are broadly balanced.
Dr. Daly, good morning from New York. I want you to fold in here Jeff Curry's work on oil and what you see and touch on in your research note as well. Bring up the chart if you would. Jason, let's throw up here. I just picked India, Kevin, just as I could pick Turkey as well. In Brent crude with white normalized back to 2011, and then with a massive depreciation of rupee, you get a really ugly price for the people of India. The spread has widened out dramatically between dollar-based oil and rupee-based oil. Kevin, when does EM break because of oil prices or sustained high oil prices?
Well, Tom, you raise a great point, and it's one that we emphasize a lot in our research, that actually, although I think rising oil price is often seen as being positive for EMs, actually in aggregate we find it is significantly negative, particularly for these oil importers, particularly for countries like India, particularly within my own area, CEMEA, is that the likes of Turkey, and in particular, it is very painful. And so I think some of that adjustment is still taking place, but a lot of that adjustment has already taken place in the activity data. You've seen growth slow markedly. But
this is, Kevin, this is really important. Is this a year-over-year change where you change, you adjust, and then you move on? Or is there a real issue here of a chronic level change that affects society?
I mean, for us, we think that most of the adjustment in oil prices is now behind us. I think it is true is that the reason why I argue that the risks are balanced going forward presumes that there are no new negative shocks in the system. If oil prices were to rise significantly further from where they are now, then I think that would bring additional pain. But that's not what Jeff is forecasting. That's not what our commodities team is forecasting.
What's your take on Turkey? What happens from here, Kevin?
We remain, very, very cautious. Obviously, Turkish assets have improved with the news over Pastor Brunson and the better environment with the US is that has given a boost to Turkish assets. In our view, we expect inflation is currently 24.5%. We think it's going to rise to 30% in Q1. We think that rates, given much higher inflation, even from these very high levels, we think rates are going to have to rise significantly further. We think the risks are skewed. Will they
rise significantly? I mean, this goes back to central bank independence.
Indeed, but it's we don't think they'll do so. We'll think ultimately they'll do so reluctantly, but they'll be forced to do so by the dynamics in inflation going forward. So we remain pretty cautious about Turkish assets.
Kevin, I want to switch to Russia as well. A great mystery. I saw a photograph of Mr. Putin in a car driving the leader of Egypt the other day. I mean, is it an EM economy? Is it a frontier economy? And how does that play into ruble dynamics? And just simply the mystery of where Russia fits into all this.
I mean, what's interesting, Russia is an exception to this more challenging environment that I talked about, in as much as, obviously for Russia, the huge 30% rise in oil prices we've seen this year is a fantastic bonus for the economy. And we're, in that context, the clear risk is that there's a significant tightening of the sanctions going forward. But to our minds, actually, Russian assets are pricing in all but the worst sanction scenario. So given this boost from oil prices, and given where Russian assets are pricing now, is that we're relatively constructive on Russian assets.
Let's dash from
and
Goldman,
the ruble in particular.
Yeah, let's dash from Goldman Sachs to Lombard. Odier, Vasileios, flat out, do you agree with Kevin that ruble can be good here?
Yeah, I think so. I think there are a number of positive dynamics going on. I think Kevin clearly mentioned the fact that we are seeing quite a significant rally in oil prices. And let me say, from a historical perspective, because of the EM route that we've seen over the past few months, there's been a decoupling in this correlation between dollar, ruble, and oil prices. And let's not forget, right now, there are solid fundamentals in Russia. And most importantly of all, we are talking about a very credible central bank. For example, in the region, if you compare that with the CBRT in Turkey, this is miles away in terms of credibility. So I think on the whole, there is prospect for the ruble to appreciate from here, and I think we are quite constructive on Russian assets in general.
Let's also, Tom, talk a little bit about South Africa. We spoke to one of, actually, the experts when it came to land experts creation from the ANC just 2 days ago. Where does South Africa go from here? Is it more rand weakness or the kind of the bulls back?
So we were among the optimists among South Africa this year. Is that we believed that on the back of Ramaphosa's victory last year that there would be a boost to growth. I think what we've seen in reality is that that political dividend hasn't come through, and meanwhile the rise in oil prices, in the context of a broader deterioration in South Africa's terms of trade, the slowdown in global growth, have dominated the positive news on politics in terms of driving growth weaker. That said, is that we think that the rand is exceptionally weak at these levels. Below our estimates of fair value. We think that most of the bad news is now priced in, and we think that the growth data in the first half of the year overstated the weakness in the economy. So we're optimistic going forward. Do
interest rates have to rise given CPI?
Well, there's not. I mean, it's a risk clearly in the near term, and the rand will be a key determinant of that. But no, we're at a consensus on that, and we think that rates will stay on hold from here, and ultimately that the next move in rates is going to be down.